A very good afternoon and welcome to Midcap Radar on CNBC-TV18. I'm Ekta Batra and with me is Hormuz Fatakia. Well, it's turning out to be a session where we've definitely picked up a little bit of pace, Hormuz. You know, we have the Midcap index, which is now at the high point of the day. Similar trends to what we've seen for the entire week, where we've seen the Midcaps outperform and the advanced decline ratio, which is steady for today's trading session as well, third day in a row. So no complaints coming in. And what we are seeing is maybe a little bit of pickup in terms of the bank Nifty as well.
Some things just don't change when it comes to the broader market outperformance. But as we begin the show, let's take a look at the headlines. First up, the markets have perked up in the afternoon session after a slow start. The IT and energy stocks are leading the gains, while realty and FMCG are in the red. The Midcap index, as always, is at the day's high.
The realty index is the top sectoral loser, declines after an 8-day rally. The stocks such as DLF, Oberoi Realty, Godrej Properties, Lodha lose between 2 to 3%.
Metals and mining stocks surge at the back of their operational numbers. Hindustan Zinc reports its highest ever quarterly refined metal production. Nalco sees its highest ever aluminum sale of 4.7 lakh metric tons. MOIL reports a 35% year-on-year surge in its production.
Satin Credit Care gains, assets under management grow both sequentially and on a year-on-year basis. Meanwhile, Bharat Forge is under pressure after North America Class 8 truck orders slip for the fourth straight month in March.
And GET and India will get a new holding company post the GE split. Their energy business will be spun off under GE Vernova Inc. with effect from the 2nd of April. The stock is up in a 5% upper circuit. Who would have thought, right? After a start that we had a 100-point down tick at the start of the trade, we are almost at 22,500 now on the Nifty. We've been highlighting this since the morning. Respecting the levels is the index. Found support slump somewhere below 22,400, somewhere close to 22,350. And now again, it's finding a bit of resistance as it's trying to cross that 22,500 mark. But some things, as we mentioned earlier, don't change. The broader markets are doing very well for themselves. The mid-cap index is up almost 1%. The small-cap index is already up by 1%. So good going there for both the broader markets as well as sharp recovery from the lowest point of the day. The real estate index, though, is the top sectoral loser, and that was the sector that was outperforming for the entire all of last week. 2% down on the realty index after an 8-day rally. So a bit of pain on the real estate index, but overall we're doing fairly well for ourselves.
Yes, absolutely. Absolutely no complaints which are coming in for a day where we are seeing the advanced decline ratio on the positive terrain for the third consecutive trading session. You know, 8:1 on Monday, 4:1 on Tuesday, and now we're sitting at almost 3:1. So that continues. But let's get to our segment, Mid-Cap Movers. We have Nigel coming in to take us through all the mid-caps that are moving around in trade.
Well, that's right. Let's go with some big movers first. Imphal, that's one of the top volume winners today. That's up close to around 12% the last time I checked, now up 13% odd. Manali Petro, well, that stock as well. Intraday, Sunny saw a big spike and now it's moved to the high point of the day, up close to around 15%. And Mascot and Dock, any kind of dip on these sort of stocks are getting bought into. Last month itself, the stock was a little bit under the weather, but just take a look at the bounce back. That stock is up close to around 10% as we speak. Let's focus on some larger volume gainers that in today's trading session. A few of them should come up for you on the screen. You have Dish TV that's up close to around 6.5% on very, very high volumes. Edelweiss Financial is up close to around 6% as well. And Infibeam, we don't talk about the stock very often, but that stock as well is up close to around 6%. GE Power is the other one that comes on my list, which is up with a gain of close to around 10%. So there are a fair bit of winners in today's trading session. But just to wind this down with a few losers, Godrej Properties comes in for profit taking. Macrotech Developers as well has come in for some profit taking. And Balchal Nagar as well. That's the other stock in there. That's down close to around 3%. Back to you guys.
Booking for real estate stocks. Thanks a lot, Nigel, for joining in. Let's welcome in Ruchit Jain of 5paisa.com for a technical check on the markets. Ruchit, good afternoon. Thank you so much for joining in. 22,500 on the Nifty still continues to remain a barrier. Fourth day running now. Tried to get, not able to cross that. When does that happen, A? And what about the Nifty Bank as well? How long does it remain in that 1,000-point range between 47,000 and 48,000?
Very good afternoon, Hormaz. Very good afternoon, Ekta. Well, I think although we have been witnessing that resistance around 22,525, 22,530, even the call option writers are still outstanding at the 20,500 strike. But if you look at the broader market's move, then the market breadth remains quite healthy. In spite of today's gap down opening, we have not seen any kind of follow-up selling or any kind of panic selling happening in the market. Generally, whenever such situations happen, The consolidation standouts too for 2 to 4 trading sessions, and then again we witness a breakout for a resumption of the broader trend. And we already know that we have a big event ahead of us, which is RBI policy. So mostly, I think towards the end of the week, we should see a resumption of the momentum. And on the higher side, we expect that once this 22,530 is taken out, then 22,700 to 750, which is the 127% retracement of the recent 800 points correction, that should be done. So till index is trading about 22,300, I think nothing much to worry about. It's just a matter of consolidation of couple of trading sessions. We should break that barrier soon and head higher towards 22,750 levels.
Okay, all right, fair enough. Any specific stocks?
A couple of buy recommendations. No, first would be a buy call in SBI. So I think the PSU banks, the broader trend is still intact. Recently, we witnessed some dip in many of the PSU names along with the broader markets, but SBI has managed to form a good support around its moving average. And again, the corrections were not supported by any kind of higher volume-based sell-off. So I think next leg of up move has started from this recent swing low. Short-term traders can still go long on the stock with stop loss below 750 for potential targets around 800 in the near term. And Tata Elxsi is one of the mid-cap IT names which is looking quite attractive today. A long consolidation of about 2 to 3 months have been seeing, in which 8,000 was acting as a resistance, and that has been broken. That too with very good volumes compared to average of last few weeks. So I think Tata Elxsi, one can look out from a trading perspective to go long over here with stop below 7850 for potential targets of 8,370.
Just a word on the realty index, Ruchit. After an 8-day rally, we are finally seeing some bit of profit booking. The index is down at the lowest point. Most constituents are also declining, seeing some profit booking from higher levels. Is this just another pullback? You can use those dips to buy into, or is there a reversal in the trend on the charts, if you can see that?
So no signs of reversal, but the momentum readings were quite overbought post this recent up move. So I think it's just a corrective phase within an uptrend. And I think that correction could extend a bit towards, in the Nifty Realty Index, towards 910 to 915 range. So ideally, it does remain a buy on dip approach should be kept in the sector. Stocks such as DLF is there, or even Soba is there, which have witnessed a good trended action of late. I think such names should be kept on the radar, but not at current levels. I would wait for some more dip. Once this corrective action is complete, then I think one should focus on realty names again.
Okay, all right, fair enough. We're going to let you go on that note. Richard, thanks very much for joining in and giving us all of those strategies and what you're looking at technically, and what is the market which has definitely picked up a little bit of pace, but overall the Nifty and the Sensex are still consolidating. We need to take a short break, but before we do that, here is an important notice for our viewers. Please be cautious of the fake accounts on social media platforms. Our anchors do not endorse or recommend any stock. Exercise caution with direct messages from unfamiliar accounts. Follow us only on our verified accounts and catch all CNBC TV18 news and updates on Facebook, X, Threads, Instagram, and JioCinema. Welcome back. Well, definitely a lively market on our hands, especially for the broader markets. We have GSFC, which is up around 7% at this point in time. It's already rallied around 20% this week. MMTC is giving it company with a 15% gain this week. It's up around 5% at this point in time. And even a couple of stocks such as Reliance Power and Jaiprakash Power are seeing a bit of an up move. In fact, both those stocks are up anywhere between 4 to 5% at this point in time. IFCI too joining the list, up around 5% for that particular stock, which has rallied 57% this year. Let's move on. Reports are suggesting that cement companies have undertaken price hikes across the country. Nigel is with us to tell us more.
Well, yesterday late in trade, you had unconfirmed reports that suggest that dealers were looking to increase cement prices by 20 to around 80 rupees odd. And that's what got a lot of those stocks excited. And the suggestions were that, in fact, 20 to 40 rupees in Maharashtra and close to around 50 to 80 rupees in various parts of South India. Now, the only caution out here is there could be a potential price increase that will be pushed forward to, but acceptance could be very, very different in terms of the amount of the quantum that's going to be accepted. So don't pop the champagne before it's party time. And the reason I say this is because a few points that come up for you on the screen. The acceptance of the price increase needs to be tracked. The second part is that towards the end of a fiscal, you'll see a lot of volume push. So some of those dealers, there'll be a lot of inventory in the system. So that inventory first needs to get out of the system. Then you'll have fresh stock that will come in. Then you'll get a good sense of how demand is shaping up and how much of the price increase can be absorbed. And finally, elections around the corner, right? It'll be very difficult to push through some of those price increases. But there was good reason for a price increase. Why is that? Get the previous graph up for you on the screen. Because in the past quarter, you had a sequential dip in prices. The pan-India prices were down by close to around 5.5% approximately on a sequential basis. And South and East India, they got a harder knock. So in case there's a price increase, you'll see a sharper increase in both South as well as East India. Then what was good about the past quarter? Well, volumes could be a little bit better, and Jefferies as well admits that in their note, that they were working with 6 or 7%, which it actually could be a little bit better. And brokerages were anticipating a price increase, both Jefferies as well as InCred. They said that, yes, they're anticipating a price increase in the month of April, but sustainability is key, and sustainability will be key for their profitability as well. So watch out for a price increase. There will be a push that will take place, but the actual acceptance will take place only after April 10th to around April 15th odd. That's when we'll actually understand how much of it is absorbed. That explains why the stocks, after seeing a big surge in the final hour of trade yesterday, today they're more or less flattish in trade. Back to you.
Don't pop the champagne before it's party time. Words of wisdom there from Nigel, who knows a thing or two about that for sure. And thanks a lot.
Both the champagne and cement.
Thanks a lot for joining in. And a number of other stocks, as Ekta mentioned, it's a lively market when it comes to the broader market space. A lot of them are in focus on the back of news flow, and Upasna is joining in with a roundup of that. Upasna, take us through the stocks that are on your list.
Well, first up is GSW Energy, the company to raise up to 5,000 crores via QIP in one or more tranches. And the QIP issue opens and the floor price is seen at 510 rupees per share. Next up is Anupam Rasayan. The company signs LOI with Japanese multinational company worth almost 743 crores over next 7 years. Well, the LOI is signed mainly to supply to advanced intermediates using fluorination chemistry. Well, next up is a couple of realty stocks. The Suntech Realty is also in focus as it expands its annuity income business of its commercial portfolio. Hence, it enters into a long-term agreement of its premium commercial building, that is Suntech Econ, to Bennett and Coleman. The build-up area of the given Suntech Econ is almost 2 lakh square feet with a rental of almost 300 per square feet per month on a carpet area basis, leading to a revenue of close to around 2,000 crores over the tenure of 29 years is what the company has indicated. And lastly, Indiabulls Real Estate will also remain in focus as the board meeting is scheduled on 5th of April to consider proposal of raising funds via debt, equity or any other securities. Hence, these are the stocks that are on my radar.
Okay, all right, Upasna. Thanks very much for that. So those are a couple of stocks in focus. Well, let's get in some opinion now. Earlier today, we did speak to Jahangir Aziz, who is the global head of EM Economics at JP Morgan. Listen in to what he had to say over the RBI rate cuts and emerging markets.
I think the concern isn't so much that inflation is going to spike back up. Core PC has been reasonably well behaved. It's just that last mile problem where can US get inflation down to that 2% core PCE number and sustain it there? I think that's where the market is concerned with. But as far as the policymakers are concerned, you should listen to Chair Powell or you listen to the officials around the Fed. Chair Powell's view has been guiding us, I think, to a June rate cut. That's what we have. Probably about 3, maybe a little bit more, but 3 is what we have in our baseline. I think the earliest you would see is probably a July rate cut, but it's going to be a very shallow rate cut. China was the only one that had these $1 trillion market cap companies. You take China out of this mix, then in the rest of emerging markets, you do not have places where you could put in reasonable amount of large capital inflows, i.e. that the absorptive capacity of emerging market equity markets has been very, very shallow. If you think about market cap in India, market cap in India is about $4 trillion US. You have a company in US called NVIDIA whose market cap is $3.5 trillion. So I think size matters in these things. China had the equity capacity. The other emerging markets don't have the equity markets do not have the capacity. You can't put in more than a certain amount of finite money in non-China emerging market equity markets. We have done that. Now we are looking at concerns of overvaluation.
Okay, all right. That's Jahangir Aziz talking about China, the undervaluation there, and what they expect from the Reserve Bank of India. Need to take a short break. We have an announcement, however, to share with you all. We are launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shenoy, where she will be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. There's a lot to learn and lots to do. Whether you're in your 20s, 30s or even 40s, this live webinar is for you. We have limited seats, so don't miss the chance. Register now. Scan the QR code to register or log on to cnbctv18.com. We'll see you on the 11th of May.
The mid-cap index is now gaining strength as we speak. The small-cap index, though, is up 1.2%. The highest point of the day for the mid-cap index and for the small-cap index as well. A couple of stocks that I wanted to pull up, though. First up was Tata Technologies, and that stock is up for the 3rd day in a row today. They announced a tie-up with BMW yesterday, and since then it's been building on those gains. I see a sharp spike from those levels towards the early part of the trading day. 11% now in 3 sessions. However, despite this move, the stock is still below its listing price. That was 1,200 rupees. The IPO price was, of course, 500. But it listed at 1,200 rupees and saw a correction post that. And now after this 3-day surge, during which it has gained 11%, it's still below its issue price of 1,200 rupees. That is Tata Technologies for you. But a sector that has done very well today, as Nigel also highlighted, one of them in his mid-cap movers, that was the shipbuilders. Mazagon Dock, Cochin Shipyard, Garden Reach, all of them doing very well for themselves. Mazagon Dock 11% higher now at 22.18. And both Cochin Shipyard and Garden Reach also trading with gains of 7% and on significantly high volumes as well. So it's not as if this move is coming on low volumes, on very high volumes. All 3 stocks, remember, but Mazagon Dock has very low free float in the market, though 84% still is owned by the government. And lastly, Laurus Labs, and that is an interesting one, 6% higher now at 440, and it has turned positive now on a year-to-date basis. It is for 2024, a year-to-date basis. It has turned positive after today's move, up 12% now in 4 sessions. And for Laurus Labs, I remember in December, it highlighted that 430 to 440 is a very crucial zone, and it moved towards that level, then it declined, and now it's back at those levels at 440. And on the valuation basis also, it's trading at 52 times FY25, and it's very close to its 5-year average, which is around similar levels.
Well, yes, expensive stock there, but let's see whether the earnings in fact catch up for Laurus Labs, which has been a little volatile in the past few quarters. If you're talking about pharmaceutical companies, in a similar space is Divi's Labs, which is in fact gaining within the Nifty space. It's up around 2%. This is after BofA Securities has upgraded the stock to buy from underperform and raised the target price to 4,025 from 3,380. They believe that the consensus downgrade cycle is likely to end in terms of the near-term visibility on drivers of earnings growth. Remember that there was a complete underperformance in terms of margins. So now they're expecting their margins to improve going forward, as probably the worst in terms of triggers is over. But Zee Entertainment is also in focus today after it announced the management would like to take measures to cut costs. Mamakshi is here with the details on that story.
Well, absolutely, Ekta. When we look at the Zee Entertainment story, it has led to a volatile movement in the stock price. Now, after the Zee-Sony merger fallout, the management has taken several measures for cost rationalization, and the latest one being that its MD and CEO, Mr. Puneet Goenka, has taken a voluntary 20% pay cut. Now, keep in mind that in FY23, he took home nearly 35 crores as remuneration, so nearly 20% cut will imply 7 crores of savings for the year ahead. Now, when it is a portion, keeping in mind the current financials, back of the envelope calculation suggests that the net profit could actually see a boost of almost 3%, while it is a little, it is very marginally beneficial on the EBITDA level. Other than that, earlier as well, we did see that the company had decided to prune its technology and innovation center by almost 50%, and this was done in order to achieve a cost-effective structure. Now, all of these measures are a part of a much larger picture that has been put in
into motion by the company on March 26 when they institutionalized a structured monthly management mentorship or a 3M program. And the objective of this program is to achieve some of the key operational metrics, including the targeted 20% EBITDA margin that the company wants to achieve. Now, given this development, we also spoke to Karan Torani of Elara Capital, and he said that the company is showing intent to improve profitability, but the stock could see re-rating only if the execution for this counter is done right. The upside is, however, restricted, and that is mainly on account of several legal overhangs that still hover about the company. So on the back of that, keep an eye out on Z Entertainment.
Thanks a lot, Vamakshi, for joining in. And in fact, Yash has put together a very interesting analysis to decode Puneet Goenka's remuneration. Remember, he cut his remuneration by 20% yesterday. But Yash, is the cut actually a cut?
Well, Hormas, to get to that very moot point, as Vamakshi pointed out, Puneet Goenka in FY23 took a salary of about 35 crore. This salary, of course, included your salary and allowance, variable pay and one-time payment. A 20% cut to that would mean about 7 crore saving as far as Z Entertainment is concerned, which by no means is insignificant. But if you look at Puneet Goenka's compensation over the last 5 years, it has grown at a much faster clip than what the company itself has grown. Now, if I just have to put some numbers to this particular statement, in the last 5 years, the revenue growth for the company has gone from 7,933 crore rupees to about 8,087 crore rupees, which is a growth of just about 2%, a little shy of 2%. If you look at the profit trend for the company in FY19 had profits of nearly 1,567 crore rupees, which has come all the way down to just about 47-48 crore rupees, which means 90% of the profits which the company made in FY19 are out of the window. The company is just left with about 50 crore of profit. Now look at Puneet Goenka's compensation in the same period, that is about 5 years. It has grown from just about 8.3 crore in FY19 to about 35 crore in FY23, which is a growth of 323%. Now, as I said, of course, the news on the pay cut of 20% for Puneet Goenka certainly would cheer investors. But looking at, the revenue growth, the profit growth, practically no revenue growth and profit decline, how the profits, how the salary or the compensation for Puneet Goenka has grown certainly would be a dampener to that positive news which came on the exchange.
Okay, interesting take there, Yash. Thanks very much for joining in and speaking with us and telling us about the Z Entertainment and the salary hike which has been taken by Puneet Goenka over the past few years. Well, that's all the time that we have on Midcap Radar. However, your stocks once we're back. Stay tuned.